A firm is evaluating two mutually exclusive projects which produce the following cash flows. The firm's cost of capital is 14% per annum. This is cash flow for project A and B with the initial investments. Please take note, this is the end of year. Okay, it's important to take note whether it's the beginning or end of year. Explain clearly the meaning of mutually exclusive projects with an example. These projects have the same function and so compete with one another. The acceptance of one project eliminates the other projects from consideration. An example, a company deciding between building a residential apartment or office block on a piece of land can only choose one option or any sensible answers. Calculate the payback period for both projects. Are the projects acceptable assuming that the maximum cutoff period for the firm is 2 years? Show your workings to 2 decimal places. Project A. Notice that this is annuity because the cash inflows are the same. So the payback period, you can use this formula, substitute the figures in, and you get the payback period. Project B. By year 3, amount recovered, simply take the cash inflow for the first 3 years, add them up together, and you have the total amount recovered by the end of year 3. The payback period, simply 3 years, you know it's 3 years, and left with 3,000 to recover the initial investment. Divide by 78, you get the payback period. You round off to 2 decimal place. Both projects are not acceptable as they are beyond the maximum cutoff period of 2 years. Calculate net present values of these projects. Which project is acceptable? Why? Project A, please take note, is at the end of year, not beginning. Let's draw the timeline here. Put the figures in. This is annuity. We have to find PVA. Find PVA. Use the formula. Substitute the figures in. Extract from the table, the interest factor table, and get the figure. And find the answer for PVA. Find NPV. Simply NPV equals to PVA minus the initial investment. Substitute the figures in and get a negative figure here, which means it's not making money short. Project B. Take note, this is the end of the year, not beginning. This is a timeline. This is a future cash flow at different time, and we have to find PV. This uneven cash flow method. Please take note of N. Please take note of N. This is the area where many students make careless mistake. From my past experience of marking tests and exam papers, many students make careless mistake. Please take note of this. You have to understand in order to apply it correctly. Otherwise, you will lose a lot of marks. Okay, for year 1, discount back by 1 year. So N is 1. K is 14. This is simple. It will be K the same throughout. K equals to 14 throughout the 4 cash flow. Then from the present value, simply cash inflow times the PBIF times 0.877, give you 39K. Second year, N is 2, apply the same principle, okay, here. Third year, the N is 3, 4 years, N is 4. Simply, at the end of 4 years, it discount back 4 years, so N is 4. Add up all the PV together, you get the grand total for PV, less the initial investment, and you have the net present value. Compare the value for project A and B. A is a negative 3,000, B is a positive 3,000. Negative basically means that it's making loss. Okay, so obviously you will choose project B. Okay, project B is acceptable because it has positive net present value. Based on your answer in C, estimate the internal rate of return for project A only. Support your answer with a reason. Is this project acceptable using IRR method? Your answers may be indicated as IRR more than X% or IRR less than Y%. No calculation are required for this answer. IRR project A is less than the cost of capital, 14%. How do we know? We know from NPV. NPV for project A is negative as calculated in part C. So we reject A as IRR is less than cost of capital. Okay, the following I will show you calculations, but no marks will be awarded for it. We find IRR for project A. So step 1, find the PVIF A IRR. Use this formula, substitute the figures in. From the table, you find that IRR is between 12 and 13%, so it's 12 point something. So 12 point something is below, okay, the cost of capital of 14%.